Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So as we all know, today being Thursday, we've had the better part of the week, and we saw US CPI coming in lower than expected, and this brought out of volatility yesterday. And today we are looking at yet another set of news that may eventually cause volatility in the markets. So we'll be looking at key price levels, news to expect for the day, and hopefully everyone gets to find value from this session. So let's begin right away by looking at the economic calendar. So as you can see, yesterday was the most volatile day for the week. The most anticipated news for the week is behind us. That is US CPI, which went up by 0.1% last month, compared to an expectation of 0.2% and the previous reading of 0.4%. It's basically indicating that US inflation is slowing down at a faster pace than the market was expecting. So in the previous reading, US inflation was 6%. We expected 5.1, instead we got 5.0. And this was taken very positively in the markets. So core CPI rose by 0.4% compared to the previous reading of 0.5%, but well within expectations. So there was a couple of speeches from Bank of England Governor Bailey, and also we saw the Bank of Canada Monetary Policy report, as well as the interest rate decision, where the Bank of Canada decided to hold interest rates at 4.5%. So towards the end of the day, we had the Bank of Canada press conference, and then later on, the Fed FOMC meeting minutes. So in the minutes, the key highlight was that some of the members were in favor for a 50 basis point hike, though they decided to go for a 25 basis point hike in consideration of the banking crisis arising from the collapse of the Silicon Valley Bank. So today, we started off very well. You can see a series of greens here, basically indicating a positive outcome of the news. In China, trade balance improved very well at 601 billion compared to the previous reading of 810 and the expectation of 275 billion. So this was a good news, basically indicating that the Chinese economy is strengthening. Export made a very good spike, especially when you consider that interest rates have been suppressed really low, and at the same time, interest rates came in at a surprisingly low number of 0.7%. I think this was on Tuesday, 0.7% here, with the inflation getting slower and slower. So going forward for the day, there's quite a number of things that we're expecting. One is industrial production month over month. This is supposed to have been aired at 11. So if I just refresh here, you'll see this. Yeah, came in at a negative 0.2%. This has been a trend in the Eurozone. So we are seeing weaknesses across board. And one of the biggest one we have seen this morning is UK GDP month over month. So in February reading, UK GDP came in at 0.02%. This is a big slowdown compared to the previous month, which was January, where we had a record of 0.4% growth. So with this slowdown, then the speculation around a recession may be in the books. So we know that the last recession we saw in the UK was during COVID, May and June 2020. And now we are facing yet another possibility of a recession. So you can see the swings that you've been experiencing here. 1 month on the upside, 2 months on the downside, 1 month on 2 months on the upside, 1 month down, 1 month up. And now in the most reading, it was 0%. So this is quite worrying for the UK. So the pace at which the Bank of England has been hiking interest rates may have to slow down to avoid getting the economy into a recession. So besides this, there's a good trade balance, which came in worse than expected at negative 17.5 billion, compared to an expectation of negative 16.9 billion. And also the previous reading was negative 16.1, meaning that currently the UK is a net importer and the load is becoming bigger. So the most important news for the day will be the core producer price index as well as producer price index in the US. And these will be coming up at 3:30 p.m. This is basically a measure of the prices that are paid by by producers, changing the price of finished goods and services sold by producers, excluding food and energy. That is for core PPI, but for main PPI doesn't. It also includes food and energy prices. So besides these, we get the weekly update of unemployment claims. Previously 228K. So we're expecting these to rise to 233K. So later on at 4 p.m., we'll have a follow-up speech from Bank of Canada Governor Macklem. Remember, yesterday is when they announced interest rates and retained at 4.5%. So today we'll be getting a follow-up speech. So besides that, there's literally nothing much happening in the markets. The day 4 of IMF meetings continues. So there's a lot more content being shared from various websites, basically describing the current proceedings of the IMF meetings. So once we get more updates, we'll be sharing on our socials. So make sure to follow to get an update. So tomorrow, being Friday and the end of the week, we will be looking at quite a number of news. Mainly, we will be focusing on core retail sales in the US at 3:30 p.m. We'll also be looking at retail sales as well as import prices before we get a speech from FOMC member Waller. Then later on, we'll be looking at industrial production. This will be at 4:15 p.m. A very important data point for the US. And finally, we focus on the preliminary University of Michigan consumer sentiment data. So with that in mind, we know that it has been a roller coaster, especially for Brent oil traders. So I remember 2 weeks ago when the Saudis and the OPEC decided to cut interest rates to cut oil production beginning from May. There was a big jump of about $5. And since then, this gap has not been closed. So Brent oil traded sideways for close to 2 weeks before breaking towards the upper side yesterday. So after this breakout, there's a very strong speculation that we will be seeing some higher prices in oil. Notice there was a major resistance around this area here. This is the price level of $86.645 per barrel. So happened to be the resistance here and also the resistance here. So once the market broke that level, you can see the market pulling back down to retest the area and potentially making a continuation higher. So my speculation is that prices might go even higher. So after the first jump, we go to this level, traded sideways, got to this other level, broke, got to this other level. And now the initial analysis remains the same. We expect oil prices to rally and get to the $89.045 per barrel level. So this is potentially a trade that could play out today or even tomorrow. So be on the watch out and look at the price action and what happens after this. So for US equity indices, they remain within pattern. Remember, we mentioned this is within a range. So if you're trading within the range, then you want to trade the edges, with the upper edge being 41.39 for the S&P 500 and 40.69 on the lower side. So market remains within range despite having a very weak CPI. So US 30 or the Dow Jones happened to break yesterday, but eventually went back into pattern. So be observing this area closely to see whether there is some further drop and maybe target 33,289 on the lower side. And if this doesn't happen, then yesterday's high remains a key target. So US Tech 100 or the NASDAQ still remains within pattern. I remember mentioning this yesterday, that these are our limits. So market went straight, was rejected, went back down, was rejected, and then went down towards midnight. Today, we are getting right back into pattern. So potentially, we could be looking at the market trading within the range and rallying towards the upper trend line here. So for major currency pairs, I will be starting with pound USD. It was on a very nice flag here, managed to break, retest, and a second retest before rallying all the way up. And now we are testing a major resistance level that we saw previously in the month. And this is 1.25240. So after the double retest here, you can see there was a very good rally yesterday. And today, this morning, we had the GDP data leading to some further strength in the GBP. So in this case, we could potentially see the market getting to 1.2540 and potentially breaking this level. So from here, there's an interesting perspective that we could be seeing a breakout. So we are just broken a major resistance level, and potentially we could be seeing higher prices. So once we break this level, there's a potential we'll get to this other level here. So it's a level that we last saw on the 29th of May last year. That would be almost an yearly high. So if we happen to break here, the only resistance available from all this space, if I do a highlight, you can see that there is literally nothing that has been happening here. So if market breaks here, then 1.26638 remains our key target. So for New Zealand USD, making a very impressive comeback. So we can all see that this was a major level or a major support level, and also following the CPI and the commitment by Fed members to continue hiking interest rates, then we are seeing a potential rally here to this resistance. So yesterday we were projecting the rally would get to this area, didn't quite get to that area, pulled back, traded sideways towards evening. And today we are resuming the original trend. So a key target level 0.62518 before we observe the price action to see where we're headed next. So as for Euro USD, we managed to hit our target here. Our market pulled back to retest the level and is now moving even higher. So as the dollar continues weakening, these other currencies are enjoying some good levels of green. So yesterday we had targeted, we would be seeing 1.09709, and then the next target remains the previous high, so 1.10345. So potentially we are looking at an year high. So if you all know what this pattern means, we basically refer to these as a cup and a handle. So I'll be doing a very quick highlight here. So from this point, we have our cup here, and then the handle, which is basically a continuation pattern. So potentially a break above 1.10345 will be a continuation of this particular pattern. So in this case, we normally use this swing here from the low to the high. So potentially something similar from this breakout here. So we could be seeing a price making a very strong rally from this breakout, and you have to be prepared for the next leg, and also potentially look out for this particular resistance level at 1.14858. So USD CAD managed to hit our target. So remember, after this bullish flag here, the market managed to break, retest, and continue pushing down lower. Yesterday pushed even lower. Today we have hit our target. This is the bottom of the pattern. So potentially we are looking at a break. So from the forward chart, this is how it looks like. We could be seeing a rejection and a bounce from here. But if this doesn't happen, then it leads us even lower. So from what we are seeing in the dollar index, then the Canadian dollar could continue strengthening. Yes, the Canadian dollar could continue strengthening against the dollar. So a break below this level could get us all the way down. USD-JPY, a very interesting pair. We saw a major rejection happening at this resistance, pulls back down, attempted to go higher, and now we are back to yesterday and the previous day's low, around 132.89, and a break below drives all the way to 131.8. So as for gold, it has been one of the best performing assets this year. So currently, you can see our cap is almost completing before we start thinking of a handle. We are currently trading above the 2000 price level, which is a very key price level for gold. So this was our bouncing point for 2000. So yesterday, gold made a spike and then went back down during the CPI announcement, happened to bounce just around 2000, and then today seems to be continuing. So the short-term intraday target, so if you're an intraday trader, then 2031 seems to be the target. But then on the long run, we are looking at 2069. 2069 was the high of last year. So potentially a break above this level will read all the way to 2069 and 2070 around this area. So for now, trading any pullback seems like the logical thing to do. So if you happen to see a pullback, then it represents a potential opportunity to go long. So AUD-USD making an impressive recovery again. Yesterday, a very nice rally. Today continues pushing higher. And now, if you look at the potential target here, it remains a previous high level that we saw here. So we are almost here. So there's 2 levels to focus on. So I just want to make it a highlight here. So there was this area that was acting previously as a resistance. So 0.67370 seems like the price being rejected right now. And if we happen to break this, then 0.67589. So as for the dollar index, this is what we are seeing, a key level break. So this was the major support or the lowest we have seen the dollar index trading. And then there was a very nice break here. So it seems like the dollar weakness is accelerating, and this is good for other currencies. So as long as this trend remains the same today, then these other pairs may play as projected. So that's it for today. One last thing will be the UK 100 has been very strong. We saw this rally happening from the 20th of March. It has been a very nice one, but now it seems like the market is losing momentum. And as I've been saying, there's a good chance that you'll be able to trade it back downwards. So for now, it's all about observing the weaknesses here. So far, we are not seeing enough or sufficient pressure to break into a higher high. So any sign of weakness might be taken as a potential opportunity to go short. So let's see what you guys have. I'm getting a lot of responses here. Hi guys, hi Teresa, hi Jimmy, BN, hi Kenneth and Sammy. Getting you loud and clear. Thank you, Edward, Isaac, and Apollo. He's saying he has lost me. I don't know, I think it's your network. So if a bullish engulfing bar forms on an uptrend market, is it reversal or continuation? What about if that's at the resistance level? If it's a bullish market and you want to trade the opposite direction, then you're definitely looking for a bearish engulfing, not the bullish engulfing. So the bullish engulfing is only relevant when you're looking at a support level. View on JPY. JPY is making some recovery against the dollar, but not other stronger currencies. So in this case, I'm still very bearish on JPY. So if you're trading JPY pairs, I don't think the USD is the best one. I would rather go for like pound yen or euro yen, which seems to be having a very strong bullish trend. So we made this pullback and then a very nice recovery, broke this particular resistance and moved even higher. And it's the same for other pairs. AUD JPY making a recovery, potentially hitting the previous high all the way up. And also for pound JPY is the same story. We had a pullback and then a recovery that took the last 5 days. So yesterday an attempt to go back and then up, and today we could be seeing a breakout of this level. So that's it for today. Thank you guys. Enjoy your trading. Hope you have a successful day. So card you lose again or gain after rate cut? No, they did not do a rate cut. So I don't think a rate cut is coming in the next couple of months. So for now, we look at level rates